Get the latest Zacks research, analysis, and rankings on exchange-traded funds in Exploring ETFs. Now we're going to talk about emerging market ETFs and a little special focus on what's been going on with them lately with our ETF strategist, Eric Dutram. Hasn't been a real dandy time for the whole ETF segment, especially the ETF segment. Our market's been, volatile as a result of what's going on out there with the emerging markets. But how are you actually seeing this whole situation?
Well, it certainly hasn't been dandy in the emerging market world. Investors think, things haven't been going too well here in the U.S. market. S&P 500 down about 3% over the past 5 days. Mm-hmm. But a lot of emerging markets have been even harder hit by the taper worries and some of the concerns of capital flight away from their more volatile markets. Right. A lot of investors really fleeing these markets in droves, and that's really pushing a lot of shares down. It's forcing a lot of central banks to act. Mm. We've seen a lot of foreign central banks actually boost their rates lately, although this has had a little effect so far.
All right, so you're going to be telling us about some ETFs that have been rocked
exactly
this year by this whole emerging market situation.
Right, actually in just the last couple of days. And the first one we have is actually Turkey. This country's been in focus for pretty much the last 9 months thanks to a lot of political issues they've been having. And they actually they doubled their repo rates, and then their key rates went from 7.75% up to 12%. Obviously a huge move. The currency was doing a little better following this news, but then investors really sold off. The Turkish ETF, the symbol's TUR, right. And the fund is down about 8.4% in just the last 5 days, and it continues the very weak trend that this fund has been seeing since pretty much May of 2013.
So Turkey getting roasted in the month of January.
Exactly.
All right. Next is South Africa. The ETF ticker there is EZA.
That's right. And this is pretty diversified fund considering South Africa is pretty exposed to the mining industry. Financials, consumers actually take up a good chunks here, but this hasn't really helped the fund too much. They've been battling some inflation worries of their own, and actually their very important mining sector's been seeing a lot of labor issues, and that's hurting their current account surplus deficit issues. Mm-hmm. So that's really hurt the currency. Again, the central bank recently raised rates here. Once again, though, didn't really have much of an impact. At least now, investors are still fleeing the market. It's down about 9.3% over the past 5 days. So another really hard-hit country.
All right. And Brazil, no exception as far as being hard-hit is concerned.
Exactly. Brazil, EWZ is the ETF we're looking at here. This fund's down about 25% over the past 3 months. And over the past 5 days, they've also raised rates. And they've actually been on a big rate-raising campaign over the past couple of months here, up 325 basis points in their main rate into the double-digit figures now. So another hard-hit country, inflation worries. They got the World Cup and the Olympics coming up, so they still got to spend some money and keep inflation under control, but also, kind of sell themselves to the world as the world comes down to their country. So it's going to be a very dicey time for Brazil over the next couple months.
India raised rates too.
That's right. India was up 25 basis points in their rate, but once again, they've been very hard hit over the last couple of days. They have an election coming up actually in a couple months, and there's some hope that the pro-market candidate his party will be able to win the elections, and that will boost the markets. But once again, we've been seeing a lot of weakness here. This India fund is down about 7.6%. We're looking at the Wisdom Tree ETF, EPI. It's actually the most popular fund in the India space right now. So once again, a lot of weakness. It doesn't really matter what continent you're on, Africa, Asia, South America.
If it's emerging markets.
Emerging markets has been very weak. And actually, if we look at this last slide right here.
Yeah, so what are investors supposed to do?
Well, I think it's just might as well avoid these emerging markets for the time being. They really got to get their currency issues under control. And as we can see in this chart, we got the S&P 500 compared to those 4 ETFs that just outlined. Mm-hmm. And as you can see, the S&P 500, it's been bad, but these emerging markets have been a lot worse. So I'd kind of stay on the sidelines here or look to some other emerging markets that haven't needed to raise their rates as ways to play this market for the time being.
And going forward, I mean, how long can this can draw out for a while,
this
right?
Definitely could draw out for a while, especially if the Fed continues to taper at a pretty solid level. We saw another $10 billion reduction per month from the Fed. Right. And if this continues, these emerging markets could continue to really hurt here. And at least until they can get their currency and capital flight issues under control.
Okay. I'm not going to ask, well, I guess I have to. You don't own any of these.
I do not, no.
Okay, great. That's a relief. And if you want to keep on top of what's going on in the ETF world, our ETF team here at Zacks helps you do that. And there's a whole ETF section to our website. If you're not watching this video at the website, get over to Zacks.com. You can link to it right off the homepage. With Eric, I'm Terry Ruffalo.